Welcome everyone to the CFO Swinger Watch Report technical analysis video for the trading week of April 14th through 17th. Now, the following research in each and every single weekly report is a chance at applying your own learn and earn trading system. On top of that, the combination of the weekly report and this technical analysis video will give you a complete top-down analysis on the overall markets and individual trade ideas. Overall, every report will be giving you full guidance and navigation in the upcoming trading week, allowing you to cut down on the extensive research time that is usually needed to achieve a very successful trading week. So, make sure to join us if that is something that truly aligns to your trading goals. Take a look down below at the description box to start that trading journey with us. With that, let's get into the markets. So before you guys panic, I'll just deconstruct this weekly time frame view on the S&P 500 ETF or SPY. So first of all, you guys can tell that for the past couple of weeks, or at least the past couple of trading days, has been quite hectic, especially last week, right? So we've been seeing these wild ranges of these highs and lows, as we had two back-to-back weeks that were over 3% to the upside and to the downside. And so with this type of volatility, it kind of gets hard to understand where the price can go next, week by week, especially, right? And that's the reason why we're looking at this weekly time frame. And so, when we look at the volatility itself, it seems quite interesting because when we do see extended volatility, the price gets very comfortable with whole number levels, and that is the reason why last week I was able to provide you guys with some very good technical analysis that worked out for all time frames and for all traders, right? Whether you're a day trader or whether you are a swing trader. So regarding that info, this week will probably be the same, right? We're going to continue to use these whole number levels that I've been pointing out so far, and the price has continued to respect such whole number levels. So for example, obviously this move back down, all the way back down, this huge correction. I believe the percentage correction move to the downside from highs to lows is sitting at almost 22%. Yeah, so negative 21.50% on the dot. And the price came all the way back down and it almost hit this 480 whole number level, but it pivoted right back up higher and it continued to hold major whole number levels like at 490.50 and 496.20ish, or again, if you just want to use whole numbers, 496, and also the psychological whole number level of $500. And so that's the reason why I have this highlighted here. This is our current new demand area. It was also a very major area of demand back in early 2024. So I'm glad that the price has been able to shoot back up higher and back over this psychological whole number level of $500. Now, again, let's go back to this topic of wide price ranges. So what we want to see in the next couple of weeks is a tightening, a contraction of these price ranges. Why? Well, again, these wide volatile price ranges are just not good. It's not good for any traders, right? Yes, technical analysis works really, really well since price tends to hold these whole number levels to a higher degree at certain points at any time frame. But again, these volatile price ranges is just not good for any investors out there, right? Including retail and institutional traders and investors. So if you go on the daily time frame, all right, we are starting to see subtle, small signs that the price may begin to show some sort of contraction. So last Thursday and Friday were great examples of that, especially after last Wednesday's major bullish candlestick. All right, so we basically had two inside day, right? Consecutive back-to-back inside day candlesticks when you're going from the perspective of this mega bull candlestick, right? So when we have these inside day candlesticks, it usually indicates that we're going to continue the underlying trend. And what is the current underlying trend? Well, it's to the downside. You guys might have thought that I would have said to the upside. Well, that's simply not true. All right, why? Well, we're still making lower highs, right? And again, yes, we did stop making lower lows, but the lower highs are very, very important because the lower highs are what officially takes us out of a downtrend. And what do I mean by that? Well, these lower highs will eventually give us higher highs, right? And right now we only have higher lows. So once we get higher lows and higher highs, okay, then we can say we are now back in an uptrend. But for now, we're still in a downtrend. That is the underlying trend, price trend that we are in for the short time here, right? Hopefully. Again, we've had higher lows for 1, 2, 3, 4, 5 consecutive trading days. And so maybe, just maybe, based on what I wrote in the market summary of this week's CFO Swinger Watch Report, we could get that higher high follow through from the higher lows price action so far, and we can actually see a reversal back to the upside, giving us a new underlying price trend to the upside. Right now, even if you don't, see a potential upside reversal coming anytime soon, you can still be confident that we're still seeing an underlying downtrend. Why? Well, because all of my major SMAs are still curling to the downside. The daily 10 here on the red line and the daily 21 SMAs are both still curling to the downside. We're not seeing any type of a flatlining action here, which could indicate that the price could be bottoming and giving us a nice base to lift off back to the upside. And we're not seeing anything like that, right? And also on the daily time frame, okay, if I take out all my technical analysis here, the daily 50 is about to cross below my daily 200 SMA, giving us that death cross, right? That bearish crossover of the major long-term 50 SMA below the long-term 200 SMA on the daily time frame. So again, there is a lot of overhead resistance, especially from a weekly time frame, that we need to consider if you're looking to trade only on the daily time frame, right? And that is going to apply for a lot of the names out there that you might want to look at or trade in the short term or midterm future. All right, so again, let me repeat that. If you're trying to look at the daily time frame, you guys cannot, I repeat, you guys cannot forget about the weekly supply areas and weekly resistances, because they will matter. And that is where you need to take some profits if you have been long since, well, last week or last week, who knows, right? Wherever low that you were long from, you need to figure out where to exit as quickly as possible, because there is a lot of overhead supply, not just in the markets alone, but across various momentum-filled leading names, right? And such leaders will act in a similar manner and will closely follow the overall market price action. And that is the reason why you guys cannot forget the weekly time frame or even higher time frames like the monthly time frame, supply areas and resistances. Okay, so for example, for SPY, if we're able to take out last week's highs at 548.62, okay, if you do get that nice move higher due to the information that I provided you guys in the CFO Swinger Watch Report, then we can actually start to see the price moving back up to potentially hitting this weekly 50 SMA, which will also provide us with a great area to take profits, right? If we choose to long SPY over the previous week's highs. Okay, does that make sense, guys? I hope it does. Okay, now, with that being said, let's take a look at VIX. All right, so VIX Oh VIX. So VIX is still staying very much elevated, and we nearly reached the August highs of last year. So that is some crazy volatility expansion, especially when you know that this huge downturn in the markets were self-inflicted. So this is yet another self-inflicted expansion of market vol. And I truly think that we're not going to be seeing the teens soon, or even the 20s soon. Unfortunately, I think the 30s and high 20s, so maybe around 28 to 29, will be our new normal, our new quote-unquote floor for overall market vol. And you guys need to be careful as to where you want to long, or where you want to swing trade, or where you want to day trade, right? And that's the reason why time frame matters, as I've just told you guys a couple of seconds ago, right? You need to figure out where to take profits, because market vol is still very much elevated and will most likely stay elevated with a new higher floor around 28 to around 29, or if you want a wider range, 28 to 30. So these values will most likely going to be our new floor for the VIX for the next couple of weeks. So stay on top of VIX. All right, you guys need to see where VIX is going, and especially VIX futures. All right, I've already explained why in this private CFO Discord chat room. So please go ahead and search up what I said there on VIX futures. Okay, so with that in mind, let's take a look at this week's CFO swing trade idea. All right, and that is TTD. So, the trade desk. This one has been absolutely hammered to the downside. All right, so it's just horrible timing here with TTD. Right, so TTD already had a pretty bad earnings reaction, a negative 33% move to the downside on the earnings reaction day. And after that, we saw tariff news coming in, right? We saw fears about tariffs coming in into mid to late February, and then we saw the actual tariffs being implemented, and the markets just absolutely crashed, and TTD continued to go straight down into the trash can with the markets. Now, here's the reason why I chose this name for a potential swing trade. Because TTD is looking like a very good mean reversion trade. And that is one of our favorite setups for a swing trade, as you guys should know by now. So first of all, if you take a look on the weekly time frame, right? We have this massive weekly support level sitting at $39.50, right? So the price got pretty close to it, but again, we're still in a downtrend, a heavy downtrend at that. Now, if you go all the way back here, now don't look at this one. This is a perfect entry point that I gave back in early 2023 that gave us a very nice swing trade to the upside, all the way up to $77, which was my own personal exit. Obviously, this could have been held a lot longer, but anyways, I'm going off on a tangent here. So this was a previous swing trade idea from the official CFO Swinger Watch Report back in early 2023. So back to the topic at hand, this 39.50 level, whole number level, was a multi-year level because it goes all the way back to 2022 and even all the way back to 2020. So this is a 3 to 5 year level, a multi-year level that we could potentially retest in this week or next week, depending on how the overall markets move, since TTD is also a tech name that is also influenced heavily by the overall market action. So first of all, right, that's the reason why I give you guys a potential early entry point, a bounce entry point at 39.55 if and only if we retest this multi-year level. It'll be amazing for this name to hit 39.50 here and give us an entry point, a bounce entry point at 39.55, because that will set us up for a very, very good run, a multi-week or even a multi-month run to the upside, giving us a very nice mean reversion trade back towards a major weekly SMA like the weekly 200 or even the weekly 50 SMA, but most likely the weekly 200 SMA, since, well, the weekly 50 SMA is a ways off, a long ways off from the current price or at the current lows that we are in. So now, okay, based on that weekly time frame premise, if you go back on the daily time frame, right, the daily time frame, we can take a look at this from a much shorter time frame compared to the weekly. So regarding a mean reversion trade, we can potentially get a nice breakout entry point over 55.10. Now, why over 55.10? Well, the price at that point will be over and staying over the daily 10, this red line here, and the daily 21 SMA, this light blue line over here. Right, so my two short-term momentum SMAs. And so at that point, buyers will be willing to continue to support the price up higher as long as it's able to stay above the daily 10 and daily 21 SMAs. And so an entry point over, a move over 55.10 will yield us a potential move back towards this major supply area between $62 and $64.50. Right? So why this supply area? Well, if I expand this supply area and we go all the way back to, again, 2023, this was a major area of demand, a major area of support with, well, 62 and 64.50 being major levels of support. And so now it's being used as a heavy area of supply. How do we know this? Well, if you guys remember, in the private CFO Discord, I gave you guys a very good, very quick swing trade, a 3-day swing trade for TTD, all right? And I know some people got in a day later around, I believe this day here on Monday, giving you guys a 2-day swing trade. If I got that wrong somehow, my apologies. Just go back on the CFO Discord and you guys will see the TTD trade. But overall, very, very nice swing trade for a couple of days in this current market environment. And the price was able to hit $62 and immediately rejected back down once it reached 62 and a little bit higher. And it went right in between this supply area. And it coincided with the daily 21 SMA, giving us a complete smackdown of the price back to the downside, right? And that gave us an official lower high, continuing this downtrend. Okay, so if we're able to move over $55 here, then we will most likely catapult back towards this supply area. Now, one last thing here, okay? There is a chance that we might just forget about 39.55 and actually make a very small but effective inverted head and shoulders, right? So bear with me here, right? So we have the left shoulder, inverted shoulder, already made, and then the inverted head currently being formed, currently underway, right? And if we're able to break over this 55 whole number level, this resistance level, and stay over the daily 10 and daily 21 SMAs, then potentially we can be seeing an inverted right shoulder to form, giving us a very nice neckline resistance area from 62 to to 65 for this small but effective inverted head and shoulders chart pattern. And if that does occur, I will continue to hold because that can give us a further confirmation that the price wants to revert back up higher and give us that nice explosive move to the upside, giving us that official mean reversion trade. All right, so make sure you guys go back to the report because I give you guys the complete 3-point game plan and the official option contracts you guys have to look out for if you want to play this name using option contracts. And of course, I give you guys a complete top-down analysis from a fundamental and technical perspective on TTD. So please read the CFO Swinger Watch report. Alright, so that is it for this video. If this TA video was insightful and most importantly, applicable, make sure you smash that like button down below. And if you're new here and you aren't subscribed to the channel, make sure you hit that subscribe button as well. And also, if you're watching this video when it just became public and you would like to watch this video a day earlier when it's private, all you need to do is become one of the many readers of the CFO Swinger Watch report, which will automatically give you complete access to the private CFO Discord community where you can expedite and further your learning in trading. All right, good luck, and I'll see you all tomorrow morning.